So now let's look at what are your choices. As I mentioned before, the physical gold market is a fairly simple one. Physical gold consists of gold bars and coins and is recognizable, portable, and easy to acquire. There are only two basic categories of physical gold, so if you can understand the basics of each, it'll assist you in determining the best fit for you. The two basic investment categories are bullion and numismatic gold. Let's look at bullion gold first. Bullion is gold molded into a familiar shape, either coins or bars, ranging from 1/10 ounce coins to 400 ounce bars. The value of any bullion product is based upon its metal content only, known as meltdown value. Each coin or bar the same size will generally have the same metal content and therefore have the same basic value. Some examples of bullion coins may sound familiar: Krugerrands, American Eagles, Canadian Maple Leafs, American Buffaloes, and Swiss francs, among others. Bullion offers the following advantage. It is the less expensive of the two forms to buy. However, as its value is tied to the price of gold, capital appreciation is limited, and price movements can be volatile. For example, if the price of gold goes up by 20%, then bullion goes up by 20%. Conversely, if the price of gold goes down 20%, then bullion goes down 20%. In addition, when gold was confiscated by FDR in 1933, all bullion products were subject to confiscation, and it was illegal to own bullion in this country for over 40 years. The second category, numismatic gold, consists of coins with a certain rarity value, generally pre-1933 U.S. coins. These coins have a value in excess of their gold content due to the coin's rarity and/or condition. A coin's condition is reflected in its grading. All numismatic coins should be graded as to its condition by an independent grading service and will be encapsulated in a tamper-resistant, clear plastic case with the grading and certification clearly evident. Both sides of the coin are clearly visible in the case. Without getting too detailed, investment-grade coins begin at Mint State 50 or MS 50. Uncirculated coins begin at MS 60, and proof coins are MS 70. Three factors in determining the value of numismatic coins are scarcity, condition, and supply and demand. First, scarcity. There are a limited number of coins existing. Only a fraction of the amount that exists is compared to bullion coins. Second, condition. A coin's condition, or MS grading, is a major determinant of its value. Generally, the higher the MS grade, the rarer the coin, the higher the value. Third, supply and demand. With a limited supply, an increase in demand will lead to an increase in value. Basic economics. As more of these coins are purchased and held, less are available on the market. Therefore, decreasing supply and increasing demand lead to higher prices. Two major positives. In times of increasing investor demand, coin value growth can far exceed that of bullion. Another very important positive is that when bullion was confiscated in 1933, numismatic coins were specifically exempted from that confiscation. The negative to numismatic coins: if investor demand is not increasing, coin values may not move to the same extent as the price of gold. Second, it is also more difficult for the average investor to determine fair value. Please understand that this is a very cursory comparison of the two types. I could probably spend an hour on the topic and still not cover it all. This is just meant to give you a good overview, not make you an expert. Again, thank you from howtobuygold-silver.com. The next topic in the video series will cover important considerations in determining what and how much to buy.